Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from Bangalore is Ritu Singh. Those are the top. Let's take a look at the top headlines from the startup world. Elon Musk says he will resign as the CEO of Twitter as soon as he finds someone foolish enough to take the job. Twitter users had voted decisively in favor of Musk stepping down over the weekend.
Mensa Brands partners with India Lifestyle Network to acquire lifestyle portals Men's XP iDiva and creator management and marketing company Hype. The acquisitions have been done for an undisclosed sum and will enhance Mensa's digital brand building capabilities, provide synergies in building a next-gen digital-first consumer company.
E-grocery player Big Basket bags $200 million from parent Tata Digital, which owns 64% of the company as per a report. This is Tata Digital's fourth round of funding in Big Basket. The funding round is expected to value Big Basket at a valuation of $3 to $3.5 billion post-money, the report added.
Egg-focused consumer brand Eggo's is getting $8.8 million in a Series B funding round led by IB Cap Ventures, and the company plans to ramp up market expansion, invest in the supply chain and category development, as well as build a robust team.
Eco-friendly home and personal care D2C startup Beko raises $3 million in Series A led by Rukam Capital. The brand also received funding from Climate Angels. Actor and eco-investor Dia Mirza also participated in this round.
Is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
If cryptocurrencies are allowed to grow, the next financial crisis will come from private players, said RBI Governor Shaktikanta Das, adding that he still holds the view that cryptocurrencies should be prohibited. Das said cryptos have no underlying value and pose risks for macro and financial stability.
Microsoft has been hit with a private consumer lawsuit in U.S. court. The lawsuit claims the technology company's $69 billion bid to purchase Call of Duty maker Activision Blizzard will unlawfully squelch competition in the video game industry, says Reuters. Those were the headlines that we're tracking for you this evening. Now, RBI Governor Shaktikanta Das has made yet another pitch against private cryptocurrencies, saying they originated to bypass and break the system and have no underlying value. Alluding to the FTX crisis, the governor said that recent events have proven why it might pose a risk to financial stability. Speaking at an event organized by Business Standard, he also warned that if private cryptocurrencies were allowed to thrive, it would cause the next financial crisis. Take a look.
They have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. If it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
And speaking at that same event, RBI Deputy Governor T. Ravi Shankar asserted that fintech and non-banking finance companies need to be regulated just like banks, and defended the recent rules introduced by the central bank for fintechs. Take a look.
If we want to avoid the inefficiencies caused by differential regulations for similar activities across different entities, a non-bank undertaking banking functions needs to be licensed and regulated like a bank. Without the license, it should not be allowed to undertake banking activities. This, for example, is what RBI in essence did recently when it clarified that prepaid instruments cannot be funded out of credit lines.
With over 60,000 registered startups, India's startup ecosystem has the potential to contribute 4 to 5% to the gross domestic product in the next 3 to 5 years. This, according to a report by Stride One. The report has projected that the registration of new startups is likely to grow at an annualized rate of 25% in the next 5 years. That's not all. The report added that job creation by startups will grow at 24% annually between 2022 and 2027. And according to Stride One, more than 28% of micro, small and medium enterprises in the textile industry in India rely on startup platforms to source business opportunities, registering a 29% uptick in their revenues after joining such platforms in 2022. Joining us now to decode this report is Ishpreet Singh Gandhi, the founder of StrideOne. Ishpreet, thank you so much for joining us on Startup Street once again. According to your report, like I said, India's startup ecosystem has the potential to contribute 4 to 5% to GDP in the next 3 to 5 years. Startups in 2022 didn't see the same kind of momentum that they saw in 2021. So talk to us about how you anticipate the next few years to be. Will we see a little bit of slump next year as well?
Yeah, hi Arundhati. First of all, it's always a pleasure to be on Startup Street, and thanks for inviting us. Look, interestingly, I think the way we should look at this journey should be at period of time and not point of time. So while I'll speak about 21, just the premise on this report, at Stride, we've always been concentrating to fund the startup ecosystem. And the reason why this report is quite very close to heart, because we believe that there is a lot of ecosystem financing creation which is happening through startups. And generally, it's not been spoken about the employment elements, the GDP creation, which is happening indirectly through startups. So all the activity of the funding flow ultimately results into 5 to 10x further economy creation around them. And that's what we've spoken about this in report. Specific to your question on 2021 and current year, how it's been overall slowdown. If you see on the CAGR basis in the past 5 years, we have grown startups registration have grown close to 70%, which means it's overall a very encouraging sign. And that's what we projected. We have taken a very, through our surveys and the case studies and talking to a lot of founders and the government officials, we have taken a perspective of 25% CAGR growth in the next 5 years. If case in point, we speak about last 6-9 months, I think there was a lot of buoyancy overall in the last year of venture capital flow. And considering the macro factors, we believe it will get settled down in the next couple of quarters, and you'll see this action getting back. It's still happening at the early stages. I think mid to late stages is what we project will start coming back over a period of next 2 quarters.
Yeah, absolutely, because the early stage has seen a lot of funding coming through. But like you also just mentioned, the report has projected that the registration of new startups will grow at an annualized rate of 25% in the next 5 years. What makes you so bullish? Any particular sectors you expect to see the most number of startups crop up in? What are the hot sectors for 2023?
Sure. So we've actually gone deeper in terms of analyzing that. We have taken 3 themes. Interestingly, at StrideOne, we fund the ecosystem around startups. So what we have done is we've analyzed our base of the startups, which we have around 100 of them, which we already funded, and 5,000 startups, which we have analyzed, and we have broken down into 3 large themes. One is around textiles, B2B textile creation, which is happening through the B2B sectors and all the commerce play, which is happening in startup ecosystem. We've taken a theme around gig workers, which is where you include drivers like Rapido, Zomato, who are coming at the doorstep to deliver us their job creation. And the third theme which we have taken is logistics, which is quite interesting at the cusp after the announcement of the national logistics policy, because it's talking about enabling a lot of startups. And these 3 sectors have remained core to our way of working with startups. So they have created a very important dent in the overall employability and the rise of income of a lot of MSME and individuals who are associated in this platform. So our sector's allocation remain robust from a perspective of a dollar deployed in venture capital ecosystem, how it's giving an output on the economy. So we've remained bullish on all these 3 themes largely. Plus, fintech has been an enabler. Fintech SaaS has been an enabler around them. Agri-tech sector we have counted under creation of gig plus logistics in terms of depending on what kind of B2B commerce enablement they're doing. So these have been the large themes at which we've been observing, and we've been funding at Stride Ventures and OneBoth.
Absolutely. Speaking about those 3 big themes, let's talk about funding. First of all, is the funding winter over? And do you think these big 3 themes are the companies which will thrive going forward? And do you expect funding to go mostly to them? And will we see a pickup in funding in 2023?
Yeah, so we forecast, Arundhati, interestingly, that next couple of quarters might still be subdued. But what's happening positively on that front is there's a lot of credit enablement. If you take our venture debt numbers or our NBFC numbers, it's really gone up on credit requirements in the last 2 to 4 quarters. So we see that uptick happening. Equity funding wise, we have a projection that next couple of quarters will be is when people will be at the cusp of observing a little bit more how the macro scenarios will comes seeing the late stage corrections and the listed multiples changing hands. So a lot of global investors infusion might be something at Q2 of calendar year next year. We should start observing, and from there we'll have a better cues. But we project Q3 onwards it would be more stable because there'll be a lot of funds who've raised capital and they want to deploy. They're waiting for the right corrections to happen in order to ensure that the momentum comes back.
If you could quickly tell me, 28% of MSME business on average is sourced from a startup platform, now especially in the textile industry. So with increased digitization, we've seen brands betting big on the Bharat opportunity. So do you expect to see this growth continue? Will tier 2 and 3 cities come into the mainstream?
Absolutely. So interestingly, all of these platforms with the digital adoption, so we've broken down into surveys and case studies, and we've gone deeply into our startups. And because we've funded them eventually, these all MSME, SME providers on the platform, we've analyzed their change of income levels while being on platforms. And that's really rapidly changing hands. So why we can speak about last 2-3 quarters being subdued of the ecosystem, see the change in the past 3 to 5 years. For these participants of MSME manufacturers who've been erstwhile dependent on the large corporates and mid corporates, they have been opened up. Now, all these startups, what they're saying is they're going to the suppliers, enabling them with the digitalization in order to make sure that they have the demand forecasting and the ability to serve them. So we see this have a massive pick. We have companies in our portfolio like Fashionza, Groyo, Zetwork, Lalten, who've really demonstrated, Genie Mode, who've really demonstrated that very well over a period of time. And that's really helped all these suppliers on their platform. And we see this picking up further next year as well. The only aspect is while doing that, how you are ensuring that your margins and the revenues are picking up in a stable manner. But at the receiving end, the suppliers have been really, really positive about the platforms.
Absolutely. All right, Ishpreet, so bullish there on the startup ecosystem and expect funding to revive in Q3. But we're completely out of time, and thank you so much for joining us on the show today.
Thank you, Arundhati. Thanks so much.
Well, here's a CNBC-TV18 exclusive. WeWork India is looking to double its revenue and EBITDA in the next calendar year and expand to 6.5 million square feet of office space come March 2023. Speaking to me earlier, WeWork's India CEO Karan Virvani said footfalls are back to pre-pandemic levels and claimed that the funding winter for startups we were just talking about is not going to impact their business.
We started 5 years ago in 2017 with our first building on Residency Road in Bangalore. And since then, not only has it been a crazy journey building the business, but a lot of external stuff that's happened, to us. That's made it a lot
global.
Yeah, I mean, not just that. I think the pandemic to also begin with, which had its impact on the business. And then I think prior to that, there was the NBFC crisis in India as well, which had an impact on our business. Today, we sit with really strong business. Our business is almost 6 million square foot, across of office space across the country. We have about 41 locations that we've opened in the last 5 years, and about 60,000 members that are within our spaces at any given point in time. And our buildings are about 90% full now. So, to kind of see us, we were spiking a lot between 2017 to 2019, and then the pandemic hit, and suddenly there was this huge vacuum, and we were not used to our spaces being, how empty they were. But today, to see life back in the spaces, to see that the segment itself has grown so much, and COVID has just completely flipped the switch on people's adoption towards this type of model for work.
You've summarized my first 10 questions, but let me try and get more out of you in terms of operationally the year has been a good one for you. You've finally turned profitable. And I won't say finally actually because it's only been 5 years. But is this kind of growth trajectory now going to be sustainable? What kind of revenues are you currently clocking in?
Yeah, for sure. So we were actually profitable just before the pandemic hit as well, and that year would have been a great year for us if it hadn't happened. So it took us about 18 months to recover from that. And since last November, we have been profitable as a business. And we ended this year with close to about 180 crores in profit and EBITDA this calendar year, and about 1,300 crores of revenue.
And that revenue is almost doubled from last year? Almost.
Yeah, pretty much. It's like 70% up from last year. And just in the last 5 years, it's grown 46 times.
In terms of your expansion plans, you said about 6 million square feet of office space as of now.
Yeah.
Where do you hope to go in the next 1 year? A number of desks that you're looking to add? And will you continue to be in these 6 locations only?
So as a brand, our focus continues to be in the metro cities. That's for the near term, or near to long term. That's really where we want to be. Okay. We see most of the demand and the type of talent that our the companies that house within a WeWork space will continue to grow in these sort of 6 cities. So we want to continue to be there. And in terms of expansion, by March, basically by the end of this financial year, we'll be at about 75,000 desks, which is that 6 to 6.5 million square foot. And we'll be adding about 20,000 desks in the following year. So, by the next financial year, which is FY 23-24, we should end at between 95 to 100,000.
So within these 6 cities that you're currently present in, all the metros, where do you see higher demand? Where has demand been hit because of the pandemic? Where has it not come back? Where has it sprung back?
So if you see a demand, I think has always been very strong within the south compared to any part of the country. So that's Bangalore and Hyderabad, drive a big chunk of the demand. India leases close to about 45 million to 50 million square foot a year. And usually Bangalore does between 14 to 16 million of that. So, pretty much like 1/3 or, 40% of the stuff is happening in Bangalore. Our growth markets are going to be Hyderabad, Pune and Bangalore for a large chunk, as well as Noida and Gurgaon.
That's everything.
Yeah, but I would say predominantly more towards Bangalore, Hyderabad and Pune.
I see. And wouldn't you need capital, to make good on these expansion plans that you've laid out for us? Are you in the market to raise capital?
We do always need capital, and it's, earlier when we were trying to build a business, we had a lot of operational burn, and we were obviously, not profitable. Since the last 12 months, the business is generating, good amount of cash flows, and we're actually able to cover all of our business operational expenses as well as any financing that we've actually taken. So for future expenses, CapEx is going to be required, and we have cash flows to be able to sustain that.
How much CapEx would be required for future expenses?
I think for this year, we would, for the following year would be close to about 300 crores.
300 crores. Okay.
About 50%, more than 50% of that actually comes from our landlords who are now partnering with us.
On that note, it is time for us to head into a short break. But coming up next, 2022 will be remembered as the year Indian space tech startups found the escape velocity to take off with policy and capital. A special report on the great leap taken by space tech in India on the other side. Stay tuned.
Welcome back to Startup Street. Now, 2022 will be remembered as the year Indian space tech startups found the escape velocity to take off. Now, with policy and capital providing the necessary thrust, India's new age rocketry took the giant leap in 2022. But will 2023 be the year India's young spacefarers turn on the afterburners? Let's find out.
3, 2, 1, 0.
On the 18th of November, Skyroot Aerospace made the Prarambh, the beginning for India's new age rocketry, and launched India's first privately built rocket. A week later, on the 26th of November, Pixel and Dhruva hitched a ride to space on an ISRO PSLV, marking another first. The many firsts for Indian space tech startups in 2022 don't end there. Excited to take off soon, Agnikul has set up India's first private rocket launchpad and mission control. Where? In the backyard of ISRO, the mother of India's space program. 2022 will be remembered as the year Indian space tech startups found the escape velocity to take off. But the Rocket Boys will tell you it hasn't been an easy ride to the launchpad.
In 2018, when we started off, there was no policy. And people said they would never raise enough capital to build and launch rockets. But what it turned out to be, like, the capital became the first biggest bottleneck, and second bottleneck happened to be policy, which was super smooth, I would say. In fact, the support from ISRO or IN-SPACE.
Since the liberalization of India's space economy in 2020, funding for Indian space tech startups went up by 5 times to over $100 billion in 2022, according to the Indian Space Association. In fact, in September, Skyroot Aerospace closed the largest ever funding round for an Indian space tech startup when it backed $51 million in Series B, which was led by Singapore's sovereign fund, GIC. For Indian rocket startups like Skyroot or Agnikul, which raised $20 million in November and is preparing for its maiden launch in December, the opportunity is big. More than 20,000 smaller and sharper satellites are estimated to be launched in the coming decade. Each of them want a cheaper, smaller and faster ride-sharing option, an Uber or an Ola to space.
It is our understanding that it is going to exactly be like the Ola or the Uber. So even if somebody asks us what is your business model, it's just transportation business. Point A being ground and point B being space. So whether you call it as like Ola, Uber or Agnikul or Skyroot, that's exactly how it is going to be.
One of the potential clients could be Pixel, which is building a health monitor for Earth with hyperspectral imaging satellites. So far, the startup has sent 3 demo satellites, including one on Elon Musk's SpaceX rocket in April. Pixel is now gearing up to put a constellation of 6 satellites in Earth's lower orbit next year. The startup believes this could be an important milestone to show that space tech can be commercially viable.
The next step is showing that there is a market for this, right? You can raise as much investment as you want, you can raise as many funding as you want. But then if you don't have the customers paying for the imagery that you're getting, if you're not generating revenue, then you can't build a sustainable business, which is in the end what this is all about. So the total market size for Earth observation today in the world is about $5 billion on just the data sales, and then an additional $10 billion on the analytics that you can layer on top of that, right? And all of this is right now taken up by companies predominantly in North America and a few in Europe. The plan is that in the next 5 years, we become one of those players. Most of our contracts will end up being many multi-year, multi-million-dollar contracts with subscription level data sets that we'll be able to provide them.
Multi-billion dollars in revenue is not the only draw for Indian space tech startups. Globally, they're uniquely positioned in terms of the costs and technical know-how built over 60 years of ISRO-led low-cost but effective rocketry. The cost advantage could make Indian space tech startups profitable operators in one of the most expensive industries in the world.
Space launch per se, today it's around $10 billion market. It's set to grow to a $50 billion market soon. And then, with us, we want to innovate to a level where, we can slash down the cost by, 50%. It can be done. In fact, India has one big advantage. It is like by default, there is a good cost advantage. In fact, the kind of advantage we get in the IT sector, similar, we also get something in the high-tech sector like space as well,
Over the next 2 years, India's space economy is set to hit $13 billion in market size. In comparison, the global space economy could rise to $600 billion in value. India's presence could be less than 3%. This cost advantage and liberalization of the space sector for private players could enable India to build space technology in India for the world.
I strongly believe that, we can address the whole global market. I think currently we stand at about 2 to 3% of the global space economy, and with the privatization and the great push that ISRO in space and the current regime has been giving, we think we can easily scale up that percentage to much higher numbers easily.
After a monumental year with monumental launches, which put India's space tech startups on the global map, the comparison of these founders and their startups to Elon Musk and his SpaceX are inevitable. He's an inspiration, the founders admit, but affirm that India must build its own SpaceX. Akhil Vishwanath for CNBC-TV18.
All right, on that note, we'll wrap up this edition of Startup Street. Thank you for tuning in, but stay with CNBC-TV18. The news and updates will continue.